All right, good evening, guys. It is the evening of March 12th, 2020, the day the Earth stood still. So we have some important things to cover, some of which are the charts. But I just want to point to a couple things that make me feel validated in my educational approach to what we're doing. First, Tom said that he took the live streaming workshop in September 2019, and it began to show positive results in January. It takes about 3 months to, I think, onboard it, and has made a significant difference in the last 3 weeks. If you were ever going to pick 3 weeks to make a significant difference, it'd be these 3 weeks. Still scratching the surface of understanding, that's fine, because of his other active work schedule, but focus. And I see Joe is here, and Joe is the working model of how you get it done. Has applied this stuff to his own personal situation. All he's done is what I asked him to do, and he beavers away at it with relentless energy, and he knows who he's working for, his 3 kids and family. And so he is relentless on getting the questions answered that he has, and then applying it with effort. And he has all the right stuff, the resilience. Knock on wood, Joe, not trying to blow smoke, but there you are. So well done. I also want to talk a little bit about Kim's email to me this morning. It was really something. Hey, I want to also say I've posted an executive summary of this briefing already at YouTube because I had the faster upload speed at work, and I wanted to make sure that today of all days that it got posted. And I posted in another Patreon here 75 pages of I say 75, but it's really like 37. 37 pages of FAQs from the swing course, and Antonio, who is a lawyer and working as an intern, reorganized that and kind of made some suggestions about how to package it. And so I put those out there to the subscribers. So if you want to take a look at it and make some comments or just apply it, I'm happy to if you would do that. The daily reports are out on Patreon already. On this one, the procedural details for a streaming-only webinar I'm going to do for the Tharp Institute in June. In that one, that's for subscribers only. It lays out my scheme of maneuver for how to teach folks who are probably have not been to any of the workshops before, and it's going to look an awful lot like Joe's boot camp. And that is, I'm going to make a bunch of material available to them, including the strategy podcast from the last week or so. And then how to read the reports, and maybe a review of the 37 strategies or whatever, and just let them read that material, send me questions. On 1 June, I'm going to turn off the questions and prepare thoughtful answers for all those folks attending it by stream only, and then do some follow-ups. Well, if you think about it, that's exactly what we're already doing. So that's sort of, I think, is the right model for how to take on this stuff, and that is just see what we're doing, start applying it, piece at a time, using the Greco model, and then answer questions as we go, and let's just get on with it. Looks like they're gonna charge about $5,000 for that 2-day workshop. So just do the math. Tom took advantage of the he just bought the TC2000 bundle and wants to join the discount program before it goes up on 1 April. It's going to go from $5,000 to $10,000 for a single payment. He's already bought the bundle for that $1,000 off, so I'm going to give him I'm going to apply the money he paid for that to the discount program so that he then gets the bundle at half price. That seems fair to me. So he should be happy about that news when he hears it. I just think that the discount program is a pretty good deal. If you're in the sound of my voice, I would urge you to think about doing it before 1 April. When it gets a little pricier, but I just need to be able to do that. So, the day the earth stood still. Let's go take a look at that one. So this one is important too, and I want you to feel the context. So I started off that day by saying, look, this is the day that the earth stood still and ended up being down, opened up 6% down, went to 10% off, closed that way. It's not the day the earth stood still. It's still turning. And this isn't even an amazing day. In your mind, you got to know that that's true. Today was not an amazing day. It's just what happens when things are like this. So what if it's never been like this before? This is just what happens when things are like this. Nothing amazing. All we do is just apply our standard practices and trade the chart. Nothing special to see here. Just move along. The collapsing dragon is still the collapsing dragon. The river is still the river. It's just that the distances are wider because of the adaptive nature of the statistics and the math. That's all it is. Nothing special. You got to really internalize that, guys. This was at 10:30 Eastern, so that's 2 hours into the market, and the big gap had occurred, and the first sell-off had happened and stabilized a little bit. So this is me commenting on the kind of day it is. Hey, there's another 5% move in the S&P that twice, once up and once down, that hadn't even happened yet. So you got to reset and just realize, stay centered and be where you are and listen to the chart and do what you're supposed to do. That's all it is. Musashi talks about that when he says that there is no difference between combat fighting for your life and practice. If you're practicing properly, there's no difference between your practice and preparation and fighting for your life. That's a guy who was 62-0 in death matches. So Joe says, I had a hard time going short with an underlying bias of a big market bounce. Ended up missing the trades to the downside. Here's what I would do, Joe. Trade the inverse long. Right? So if the market's going down, trade S-Dow, because then it's the same chart that you're used to and it's going up. Or just stand aside on that part of it. If it takes you out of your center, then it doesn't matter. Don't try to force it. Oh, I'm sorry. Sorry. I was on the wrong side. I was sharing the wrong screen. My fault. You didn't really miss anything. Other than to say, the comments in the master class, the dragon's a dragon, river's a river, it's not amazing. It's just what we do when things are like this. No difference. Nothing amazing here. Do your job. I'm thinking of the Bill Belichick voice. Do your job. So if you like up and to the right and you can feel like you can manage that chart, it just happens to be the thing that's going up, and then it gets you out of the directional bias, then there you are. I actually find it easier to trade down and to the right because I feel the fear and it feels more reliable, and so it's easier for me to pull the trigger on that than going long. It's just the way my brain's wired. So try that. So after I posted this about it just being normal, I saw what Kim had posted, and this is, I think, pretty important stuff. So that was answering Joe's question there. Here's the things I want to say. Kim says, it is with much comfort that I prepare for what is likely to be a memorable day. Yeah, that's true. It turned out to be pretty darn memorable. Now, at the time he posted this, for some reason, he hadn't been able to connect to the evening strategy session, and the daily report had not yet been released with the video replay of that strategy session, probably because of Yahoo processing. So here it is on what had been the worst day in the market, one of the 10 worst days in the market yesterday, and then before what turned out to be the worst day in the market in the last 20 years, without attending the strategy session and without looking at the charts, his feeling is quite calm. I've framed all the charts I'm interested in and just a few extras, just in case, contingency. And here's what he says he's going to do. This is the workshop in a nutshell. I will wait for a frog entry, an owl, or an emerging dragon. Then when a target triggers one of those patterns, I'll enter. Next, set the stop and wait. Move to no lose plus dinner for 2, then follow closely when over 2R. Consider adding a position when significant barriers are broken. Trade framing. Thinking about the context. Exit on price crossing the dragon. Re-enter if the price then makes a new high over the recent high. Otherwise, move to my next target among the favorites. Then wait for a frog, owl, emerging dragon, and repeat. I am trading in a restricted account and can only trade the long side, so trade the inverse. If that's what you got to do. That's his state of mind after 1 or 2 boot camps. Age mid-60s, retiree, and didn't hear the strategy report or see but he knows exactly what to do. If he'd been just trying to mirror me, in the chat rooms and wait for me to tell him what to do, and then this had happened, and for some reason, I get hit by a train or I couldn't do, and he doesn't have anything to do, he misses the biggest day in the market in the last 10 years, 20 years. Ken, thank you for your insistence on us framing our own trades. I feel very comfortable with the charts and what they say. I know that the price is what matters and that charts display price in action. Thanks to your boot camp and training and the work he's done, not the boot camp, but the work he did to apply it. It's easy for me to tell you. It's hard for you to do it, but if you do it, it pays off. He has a plan and he will try and follow. I say just follow it. Stay safe and good trading. So, his short positions in the Dow and volatility were up 20% at the open, and his long-term positions had already been moved to cash because of the blended monthly rebalancing a couple weeks ago. I insist on teaching people to fish. It does you no good to try to mirror what I'm doing. If you were trying to mirror me, it would be as if you thought trading was an external activity rather than central to how you think, feel, and act. Trading is an internal activity that starts with your central identity and purpose and then manifests outwardly in the way that you act in the world. It makes you more of whatever you are. Your external actions in times of stress are connected to your inner state at all times. In times of world stress, like now the world is under stress, your trading performance is more important than ever. So your business plan and trading plan is prepared for those moments. You're always ready in every moment to make your decisions quickly and execute properly because of your plan, prepare, execute, assess sequence. In each trade sequence, you detect, decide, deliver, and then assess. And then you exist within a market ecosystem at all times. You can't get out of the market. And you engage in understand, visualize, describe what you see, direct what to do, lead and assess. That's taking responsibility and measuring performance. I want you to notice the predominance of assessment, which is the continuous, updated, calibrated, performance-oriented, measurable, disciplined, systematic, adaptive approach to appreciating the moment. So also from the chat room this morning, in the middle of the typhoon, God bless America and the people and at risk, in harm's way, all the ships at sea, and all our healthcare professionals. That's amazing. When things go bad, You need professionals. So be professional at all times in everything you do. And that means you're prepared to make every decision within 7 breaths, like the Hagakure, the samurai philosophy manual says. And you can do that because you're always connected to what matters, your purpose and intention. And so you do not engage in useless activities, says Masashi. And I got a little misty reading what Kim wrote because I felt like he got it. And it was a payoff to me that he got it. You guys often ask me in various ways, sometimes off to the side, why I do what I do. That's why. Bob points out some wisdom. So here's what I want to say. Blended monthly rebalancing put us in cash 2 weeks ago if you followed the rules. ETF2s had people in cash for weeks if they followed the rules. I make the rules available. I do what I can to do that. And now it was time to shovel coal, and I went back into the market, and we'll see those charts in a minute. But I want to say that in the 3 existential threats to the markets in the last 20 years, which is the internet bubble breaking, the meltdown in the housing market, and the subsequent risk to the financial system, and then now the coronavirus, BMR and ETF2 have done exactly what they're supposed to do. And as an update, that risk Z gave us plenty of warning, as did the slope statistic. You got to get the market call right, and that's how you get it. Don't forget those lessons, and remember that the price of freedom to act, is the power to act that requires eternal vigilance. And if you want peace, prepare for war. Prepare. That's what I want to say about that. I can't tell you how important I think that is. But I just tried to. Okay? All right. Back to work. Thank you for indulging me on that. I just feel like you need to know that. Let's see, where are we here? So this was yesterday's close of market health check. I want you to notice it was at about the 20% sell-off. We were near what had been Z3. We saw a low at yesterday's low. This was a breakdown of the previous day's Z3, and then that day's Z3, and then the next block of 10% sell-off way down here. We were deeply into the winter. We highlighted that MACD was at minus 23, so no swing trading on the long side. And then the market happened. So this was today in VXX, I believe. Let me make sure I'm on this one right. Is this where we were today? No, I'm sorry. No, here we are. Yeah. That was yesterday. So, this is me in the UDOW. Sorry. There had been a big gap down. UDOW is a triple long Dow, and then it got a Z3 and then broke down the second leg down. And then I want you to notice this. Here at the previous Z3 excursion, it finds support. It's 12 o'clock Eastern. And then this thing races back to the VWAP, sells off and finds support 3 times, and then starts racing forward. So here's what I did. I buy the Z2 breakout on this one, and then it's coming back and holding support while the RL 270 reverses. A ton of volume trades inside here. A ton of volume. And doesn't fail further. I had another entry pegged so that if it crossed the VWAP, I'd get it. So that I got surprised into that position. It then rockets north to where the first Z3 after the open at 30 minutes in, this is the Z3 line. It gets to there, and going through, so I buy a third position. It gets to this max excursion, and then starts to roll over. So I immediately have placed my, placed my stop. God dang it. Sorry. I placed my stop in the midpoint so that the third position is in the money. And I notice where the VWAP was. Still here. And make bank on, so on a risk of 50 cents, 46.50 to 48.50. So on a $2 minimum manageable risk box, which is from, the hump of the dragon to the belly of the dragon, it goes from 48.50-ish to 58.50-ish. 25% move off the bottom right there. Just get your head wrapped around that. This is where the official public announcement from the Fed that they were going to pump $500 billion in to prop up the equity portfolios of the banks. I mean, they were going to add liquidity. That's what I meant to say, sorry. So what do you think happened here that caused this first surge of buying? I don't know. I'm not a conspiracy theorist. But if there was a conspiracy, you would think that it would produce exactly that price pattern. But I'm not a conspiracy theorist. Thank goodness. So here's what happens in SVX next. This last one was, this was the, UDOW. But I want you to notice that UDOW's pattern, same thing as SVXY. I was focusing on UDOW during the day because the Dow's been the most volatile and I'm playing the triple. And so I saw an opportunity to get more because at a span of control of 2, so I can add a second symbol in there. I decided to shift over to SVXY, and it's identical pattern. Watch when I flip back and forth. Same pattern, same pattern. And now, this is where I think the Fed had their little behind their doors secret meeting. They made a decision, and then as they walked over to the podium, ready to make their announcement 20 minutes later, somebody bought a whole bunch of this and kept buying it. It didn't let it fail further to the point where the RL270 rolls up, and then it crosses the VWAP, and I'm in, and then I'm out 10 minutes later. So buy it at 34 with a 50-cent risk, sell it at 35.50. That's 3-to-1 execution. So this is where the Fed made the announcement. And so some SOB somewhere is making money on insider trading. If I was a conspiracy theorist, that's what I would say. So now we're back in SVXY. This is that first one I showed you, and here's the VWAP cross right here. Now, when it made its run up, and I exit here, then I get short. Now I'm using UVXY here, so I'm trading long UVXY, so up and to the right. But I want you to see the symmetry of that position and see the narrative of the direction on one chart. So I get short at the RLXD, target the VWAP. It comes down, doesn't rebound, falls through for a second leg down, and then it finds support at the rising RL270, so I cash it and make 1.5 R in both directions. Now what I do is I mark off the Z3 excursion from each of those moments, and now I carry that forward and say 37 and 32-ish are both important and significant price levels on all future shenanigans in SVXY. And then the day ends looking like this. We are deep in the winter. We're now at minus 25 on the MACD histogram. So we're below the zero line, so we have negative bias, as if you need to be told. The 1-day range, it broke from here and came all the way down to 248. So that's the 1-day range. The 10-day range extends now deeper. The 30-day range. So we've got breakouts in bold to the upside. And here's a first 10% sell from the swing high up here. This is the 10% sell, 20%, 30%, 40%. And we closed weekly at Z3. I don't have much of an overnight swing on this one, because if there was ever a time when somebody was going to say, we've decided with executive order to suspend and freeze all short positions so that market manipulators can't continue to gouge the people in their retirement accounts. Could that happen? Sure it could. Single stroke of a pen by a guy who's desperate to save the legacy that's already gone. So that can happen. So I don't want much of a short position over. I made my money this morning on that gap. You'll notice the price levels on the way up, the 1-day high, the Monday opening, the skin of the dragon, the spine of the dragon, the top skin of the dragon, the PSAR flip. The Bollinger Band mean is at 315. Guys, we're $65 away from the Bollinger Band mean, and fair value's at 321, which was a $20 sell-off from the swing high. That should get your attention. I want to say also, is it this one? Yeah, here's today. SDOW up 30%, volatility up 22 and 27, triple oil up 13%, treasuries at 0.6%, everything else sucking wind, everything in the red for daily winter. Not much more needs to be said on that. So there's that. Speed run. Not much more to see on this. So just where I am right now. 2 scoops short on Alcoa and moving my stop down to here, locking it in. Apple, no position, but man, did that get crushed. If you were the guy buying Apple at 320, I guess you love it at 250, but how bad do you love it? Aussie dollar, I missed this. Eric Morrison is doing a great job on the Forex. He's another guy that took one boot camp, got the TC2000 bundle, and is improving his own Forex. He's been a Forex trader for years, and he's ramped up his game in the last 2 months dramatically, to the point where I've got him making videos and talking through his learning, and he's brave enough to show that in public. And so his videos in the Campfire Forex room I just get so much respect for him. He's a PhD rocket scientist, career logistician, combat veteran. I trust him with my life, and he's going to be a great coach and help us with Forex in the future. I'm teaching him how to make videos, and he's already responsible for developing our departmental curriculum, so he's going to put together some bulletproof courseware on Forex. If you're ever interested in any of that stuff in the future, now might be the time to get that discount program, because it's going to be half off all his courses in the future too. He's going to market those underneath our learning environment as a payback to the community of practice. So, just saying. Boeing, 3 positions short for me, closed poorly, and hey, it's going to take government intervention to keep our aircraft manufacturer alive, just saying. And the military-industrial complex will insist that it does. So that's not going to zero, but that's one that it's got a ways to go further, and I'm watching that one like a hawk. Caterpillar, 2 positions short. It went to the depths, but rebounded pretty nicely, so if I was better and more alert, I would have just cashed it today and been done with it. but I'm going to put my stop just above that and try to get out of it tomorrow. This is the CEF, the Canadian Silver Gold Trust, had a nice bounce rebound today. Cliff, I'm 2 positions short and brought my stop down to here. Cut, I got 3 positions short because I had the stop and reverse here, and then added 2 more from intraday moves in here, and I will add a 4th position if it breaks below today's low. Now, cut is special because you can't really trade it intraday, not enough volume, but it's the timber sector, and that is geared toward the economic cycle and new housing starts and construction and all that. And nobody's building anything new these days. We're just trying to survive. If I was the king, what I would do is suspend all mortgage payments and interest until further notice and tell people we're not going to foreclose you. You're going to be safe at home. We're going to give you unemployment benefits, and we're going to deliver food to you with the National Guard and Amazon free until this thing passes. And the next 10 guys from the pharmaceutical industry that say they're going to charge people for medicine for the coronavirus, we're just going to shoot them, and they're not going to make a dime on this. In fact, they're going to pay for all of this with the $100 billion of profits that they've been making annually by gouging us on health care. That's outrageous. So that's what I'd say. And the market would have gone up 10% if he'd have said that. And I tweeted it to everybody that I know up there. We'll see what happens. Stay tuned. So 3 positions short and cut. So anyway, long-term economic slowdown. Lumber's going to suffer. That's why I got 3 positions in, and we'll add a 4th, and I'm marching it downward pretty carefully. Devon Energy, 1 position short. It fell a little further today, and I'm tightening it up to here. It just feels like energy. Those guys are going to figure out they can't afford a price war globally at the same time we're fighting a virus. They're going to get their shit together. Pardon my language. They're going to get together and figure out to suspend the price war on oil, and that thing's going to bounce when they make that announcement. I don't know, but that's what I'd be doing. So I'm very cautious. Emerging markets, I'm short 1 and marched it down to here. The stop, that is. EFA, I'm short 1, moving the stop to here. That's actually weaker than emerging markets because I think the euro's got more to lose. Japan, I'm just monitoring it. Mexico trading intraday, but they rebounded pretty nicely. Came from a low here and came all the way back up. So that actually looks better than Brazil, which closed and then got to a position of hesitation. So I'm short 1. I'm going to move my stop to there. Home Depot, I'm short 1 and move my stop to just above the close. Russell, short 1, moving the stop to here. Real estate, I wish I had that, but my short in real estate is related to the commercial real estate in Simon Property Group, which I think is a more reliable short because nobody's going to help them. But if there's any government intervention, it will be on behalf of the homeowner and renter real estate. So I have more confidence in being short there, so I'm just monitoring this as a defensive play. McDonald's, I'm short 1, and I'm moving it down. They need to put coronavirus testing into their Happy Meals, and then that would help them. I don't mean to be flippant. Not appropriate. So I think clean energy, so we're 2 positions short. I moved the stop down. I think that's a luxury. Nobody's going to be looking at subsidizing that until we get out of the woods. So there's no speculative money available for that from the government because we're going to try to pay for health care and save jobs. So nobody gives a crap about clean energy right now. The triple oil, I'm still long 1, and I moved my stop up into here. I was really close to just pulling the trigger on that one. I'm going to give it one more day, but I don't know. I haven't looked at the futures yet. SDOW, I'm trading intraday. This is nobody cares about space flight today, Virgin Galactic. So it's sold off from 44 to 14. That's what 75% sell-off looks like. And we're short one from here. And moving the stop down to here. Simon Property Group. So this is the that commercial real estate. We're short one from here, a second one from here. I'm stalking a third one. I'll get short here. My stop is in here. Look how badly that closed relative to IYR, which had much less volatility. So it just felt like this one should fail more, and I think it has. It's beyond Z3, and IYR, it's also beyond. So I guess I don't know what I'm talking about. I just have a belief now about commercial real estate, so sue me. That was SPY. I'm trading SVXY intraday. Treasuries just got smashed again today. I want nothing to do with it. There's something crazy going on behind the scenes about treasuries and yields and the international banking conglomeration and the collection of first world sovereign wealth funds. If you think about a sovereign wealth fund, that's countries that have figured out that banks shouldn't be the only ones benefiting from meetings behind closed doors, and they want to be participants in it and get a taste of this. So something's happening in treasuries that's not explainable. You would think the flight to quality would be crushing it, but Zero Hedge has an interesting article that Bob Rourke sent us. Haven't read all of it, but it's interesting. Tesla, it's down from 950 to 560. So we're short one from here. I should have shorted a second one. Do you think anybody's going to bail Elon Musk out right now? They haven't made any money, and they're surviving on government handouts. Do you think anybody's going to give a crap about him? He's already the 10th richest guy in the world. So I am thinking I need to add a second one because it's falling below the long-term fair value at 550. That's what a 50% sell-off just about looks like. UDOW, I'm trading at intraday. Natural gas got crushed. And again, I can't understand that one. I'm just interested in the energy sector in general and watching the relationship between oil, natural gas, coal, and that clean energy sort of as a little triumvirate, but four, a quadumvirate of energy. I'm just trying to understand that a little more. Oil suffering, closed weekly. But I think the price, they're going to figure out the price wars in nobody's interests. Volatility, kept a piece. I just felt like I had made enough money from the move from 13 to 45 that I could afford to keep a piece and try to get one more gap. We'll see if I get smashed on that tomorrow. That's the VIX I'm trading intraday. Wiz, it's broken, guys. It's gone from 30 to 20. And it's supposed to be a bear fighter. It isn't fighting anything. Their once a month look back and rebalancing is broken. I like their ideas, but not their execution. Walmart, I feel pretty good about making the call to cash here because now it's well below where we bought it at. It's gone from 117 to 103. That's a 15% move. It hadn't lost as much as the S&P, but even the Big Daddy got smashed. Let's see. Wheat and Precious. We're short one. I covered that one today because I want to pull this aside so you can see that. That thing gapped way down. Now, I had the stop here at yesterday's Z3, right? When it gapped down, I immediately moved the stop to yesterday's Z3. And then it just kept going up and up and up and up and up and up and up. And I just said, screw it, I'm going to take it right there. Could have or should have gotten that sooner. I gave back way too much, but it was a span of control issue. That remains on the hit list for intraday. When I'm short 2 positions and move my stop down to here, and I'll add an additional position if it goes there. Got no belief in them. U.S. Steel covered that swing short here and then got short here. And move my stop down to here And I think I will add a position if it goes there. Materials, just move the stop to here, 2 positions in. One position in, as you can see, one position here in energy, and we'll add a second position here, and I'm going to be stopped here. That's really taking advantage of not just oil weakness, but also the earnings for big companies. So it's not leverage. And so what could happen is if oil gets a rebound, then that SCO position will get stopped out, but I'll still be short XLE because I think there's some additional weakness in those companies. It's got to be manufacturers, so they're not going to rebound as much as oil might on potential news of a change. And I get no insights on that other than just other than my imagination. Short one in finance. I hope we don't bail them out. We will. Technology, short one from here. Move the stop down to here. At some point, you got to love those. It was trading at 105. It's at 73, 75. That's the tech sector. If anything leads us out in the future, it's there. So that's one of my short lists to buy. Healthcare, God bless them, but they're suffering. And I'm not going to make any money by going short the healthcare industry. That ain't right. And then back to Alcoa. So that's the speed run. And I think I did the daily report, correct? I think I did. Yeah. So that one was about a 40-minute narrative. The one that I hung on YouTube was, I think, like 20 minutes, so I didn't go in as depth. But I'm going to hang this one anyway, too, because there were some additional insights maybe. And then you can see the difference between me doing a speed run at 6 and then me doing a more deliberate run at 8. But I wanted you to have the other one in hand immediately available for what I thought were the essential elements for tomorrow's trade. I spent a little more time on this one talking about some of the other educational context and setting and whatnot. So there we are on that, okay? Let me see here. Just check to see if you guys got any questions. Trying to get that thing to expand. There we go. No, I think we're good. So there we are. Take good care, guys. Keep the faith. Get prepared. Eat well, sleep well, rest, take care of your family, eliminate unnecessary travel, take good care of yourselves. If you got children out there of investment, whatever, and you're a subscriber, you can share all this stuff with them. And if you're a coin member, discount program member, that transfers to your family as much as you want. So if you want to share lessons or whatever with that, and you give them the benefit of your power up on that, and you're in the sound of my voice, so be it. Take a look at those 37 pages of the FAQs. That was like the best of the swing trades at the time. So there we are. That's all I got, guys. Take good care. Time to go walk the doggies.